Hey everyone, I hope you guys are doing well. I wanted to bring you this video on top secrets that banks and lenders do not want you to know. Now, I worked in the banking and insurance field for over 10 years, and I'm going to share some secrets with you guys to understand how you're being judged, and it's just not your credit score alone. So let me give you this trigger warning, because some of these things will seem discriminatory, and I have 10 categories, and it's probably guaranteed one of these areas are going to hit you. So just make sure you're prepared for that and watch the video all the way through. Now, if you're new to my channel, I bring you information to help you no matter where you are in your credit journey. So if you like that kind of information, subscribe to this channel and give this video a thumbs up. Also, personalize your notification bell for this channel so you will get notified anytime I upload a new video. Also, I give you guys a free hard inquiry removal package at my website, because hard inquiries can get you denied for credit if you have too many. And I also have a DIY credit repair package at my website for purchase if you need to remove negative items off your credit report. I always leave the link to my website in the description of my videos and in the pinned comment section. And for all you guys that missed my webinar last month, I am doing another one coming up in February. So if you guys want to learn how to increase your credit score with these credit hacks I'm going to teach you, and remove negative items, and I will be live so you can ask me your credit questions and we can help you manage whatever issues you have going on with your credit. Make sure you join me if you want to sign up. The link is in the description of the video and in the pinned comment section. So let's jump into this information. Now, one thing you're going to have to understand is how the banking system works and understand risk. Now, a bank makes money primarily off of interest. So the products that they offer a lot of times is lending, products in the insurance world, and some even in the healthcare realm. Because with banks, if you'll notice, the oversight in your state, the majority of time for the bank is the Department of Banking and Insurance. So with banks like AIG, you'll notice they have insurance products, but they also own One Main Financial, which is a company that lends. Okay, so all of this overlaps, and like with insurance, you have health insurance that also deal with medical information. So I want you guys to just keep that in mind as I talk about these points. Also, banks and lenders, and even with you're talking about life insurance, they use the system of LexisNexis. LexisNexis is an information CRA, just like the three major credit bureaus, Experian, TransUnion, and Equifax. They really consider it like a fourth major credit bureau, because this is where Experian, TransUnion, and Equifax even verify their information with LexisNexis in the background of their operation. But with LexisNexis, it actually keeps your information longer than 7 years. It will have information on your profile there all the way back to high school. So I got my report and it's 72 pages. So you will have insurance companies, even healthcare, and all these other companies use information from LexisNexis even to verify certain things. So these factors come into play on that report. So it's very important that you access your report. You can go to their website and get your hands on their report. And if it's anything that's inaccurate, you can dispute those items too. So we're going to discuss this and some of these categories. It's 10 categories that they're looking at that they judge you for credit. And like I said, trigger warning. Now, the main category that they're going to judge you by, along with your credit, number one, is your address. So where you live makes a big decision on how banks look at you and how they judge you for credit. So if you're a person that lives in a low income community and you're a person that lives in a middle class or affluent community, if you're a person that has an 800 credit score, but you live in a low income community, your lending will be dictated, especially like for credit cards, on the average credit score in that community. So you may have an 800 credit score, but you're in a low income community, and that person that's in the middle class community may have a 670 credit score, and they will get a $20,000 credit card, but you'll get a $10,000 credit card. Even though you got the better credit score, you can have equal income. They judge what the terms of risk they're going to take in those areas by certain factors that are affected by your zip code. So, in that, it can look very discriminatory, but this is how they work. Another example, if you're a person who's in a low income community and you own a home, and say that person is a senior looking to get a reverse mortgage, LexisNexis have your purchasing price of that home and the current market value on their report. So the person who's in the middle class community, they have their purchase price and also their home values. All of that is dictated by what's going on in your area where the property is located. So if both of these individuals are going for a reverse mortgage, the person in the middle class community a lot of times may get more offered to them for their reverse mortgage or even a home equity line of credit. So, those kind of things dictate where your address is, where, the home you actually have, where it's located, even if you want to just refinance your home, where that home is located and the lending for that. If you're trying to get more back so you can do some home renovations, your lending is going to be dictated on that address and that location. So you need to keep that in mind. It plays a big factor. You already know your address plays a major, importance when it even comes to your insurance premiums. Okay. How much crime, what's there, what's going on. You're being judged by your address. And even when it comes down to them lending and giving you credit cards and things like that, they look at what is the rate of bankruptcy filings in that area. And a lot of times in lower income areas, you have a high filing rate. So they look at that as risk. Even if you want to get a home loan and purchase a home in those areas, a lot of times banks, on how many home loans they're given into a certain area, is dictated on how much risk they're going to take on. So, of course, in a middle class, affluent area, they're giving a lot more home loans than compared in a lower class area. So sometimes with your approvals, these factors come into play. So you want to keep that in mind, that your address plays a big part of a factor that they're judging you by. Also, too many addresses, different addresses on your credit report will make you look unstable. So you want to make sure you clean those up. So if you're a person that moves all the time, you want to get rid of those old addresses because you're being judged by that. So when you look like you're moving all the time, you look like a person who's very just unstable, financially not secure. So they will judge you by that factor. You're being judged. Now, number 2 is employment. So, for example, on your credit report, they'll say what your job title is. So if you're a person that's a CEO, you may get more premium card offers coming your way because they do put your title on your credit reports. So you are being judged by what kind of job you do and what kind of position that you have. So those that get black cards and they're more in a CEO status, they will get those offers. So you want to make sure sometimes if you are working for a company and you're filling out an application for lending, you can maybe spice up your job title, okay, to make it look like it's more of an executive type of job title because they do judge you by that. Also, when you're going for applications, if you have a seasonal type job, but you're constantly employed, let's say like a school bus driver, they, a lot of times in the summertime, they are, and drawing unemployment. You don't want to kind of state that on your application if you're in that unemployment period where you're drawing that, because they keep record of that and it makes you look financially unstable just having that on there. Just state I'm a bus driver, and if you're in the summer seasons, don't tell the applicant, the application person that's processing the application, I'm on unemployment right now. You're actually employed, because that is looked as a negative situation. So you don't want that, because they record all of this stuff in the background in certain systems. So you want to make it look like you're constantly employed, because even to qualify for a home, through FHA, that program, you have to have consistent employment for a year. Or if you're a college grad, at least 6 months to qualify for that. So make sure that you're not putting that on your application, and employment is important. So keep that in mind. Also, in the employment category, how long you work for your job. And the longer you work there, the more stable it makes you look. So sometimes on your applications, if you see on your credit profile, your old job is on there and you were there for years, it's probably best to go with that. It makes you look more steady, that you're not changing jobs that often. So it makes them have more security that you're going to have longer standing income. And of course, in your employment, how much income you make also dictate how much you're lent to, or how much even insurance, life insurance you can get. They look at your income. Like, you just can't get $1 million policy and you're only making 20 grand a year. They have guidelines and all of this on how much and your income. So they judge those factors of your employment on how much you make, in all of these areas. Big part. Number 3 that you guys need to consider that they're looking at is your age. So if you're a person who's older, at a more advanced stage of life, let's say even a person at 80 years old, banks don't want to lend as much because they know you're in the later years of your life. And a lot of times, the older you get, the less of an extension of credit they want to give you. And of course, in insurance, your age play a big factor on what your premiums are. So age does play a factor, in these applications, how much you're being lent to. So it can work, positive for you and sometimes negative. So let's take an example. If you're young, you already know when your insurance premiums, you get charged more. So when you're younger, your age is looked at as more of a risk factor in insurance and experience. But the older, if you get older in life insurance, you're more of a risk factor. You're being charged more. And a lot of times, like I said, if you're up in your 80s, for giving you a credit card, and when you're, older, how much they want to lend to you. Because put it like this, they know if they give you a loan or something like that, and that person, unfortunately, pass on, how do they recoup on that loss? You're gone. So age plays a big factor. And so people might say, well, that's discriminatory, but they look at risk. Okay, so age is a major category. Number 4, gender. They do look at your gender as a deciding factor. And also when it comes down, especially in the insurance realm, females pay less money for car insurance because generally women are more cautious. Men, especially young men, are going to be charged more premium. This also takes place in life insurance. Women tend to go to the doctor more, so their premiums, and live longer actually. So premiums for women in these categories are actually less. Men are charged more when it comes to these categories, especially in insurance. So this may look like, wow, that's discrimination, but they're looking once again at risk factors. So that will be considered. 5, owning or renting. You are judged by ownership. So if you're a person that owns, especially on car insurance, you're getting a cheaper rate because they feel like you're more responsible than someone who is renting. So even if you're renting where you live, but you own a home somewhere else, you can still get a discount. But not having property ownership, they do charge you more of a premium. In lending, so if you're trying to get a loan, ownership makes a big part, a big factor, because you may be a person that have a good credit score, a 780 credit score, and there may be a person who has a 670 credit score. Because they own a home, the bank may give them that personal loan before you, because like I said with LexisNexis, they have home values there, the purchase price, the home value. And so now the bank know how much they can really go after. So that person with that lower credit score, if they got 150 grand in equity in their home and they're going for that $50,000 loan, they can get approved with that lower credit score because that can be considered as a factor for approval, where you might have a 780 credit score, but you don't own. So then it looks like, hey, what's going on here? And also it comes to play with your age and your credit profile. LexisNexis also even have prior homes information that you even own. I had that on my credit report. What was the purchasing price there? How much it was sold for? They keep all of that on your credit report. Which is your credit report at LexisNexis. So that never goes away. So when banks are accessing this information, if you're a person, let's say 45, 50, and all you ever had was car loan, and no ownership, it doesn't make you really look like a responsible person, or a person that is investing in more tangible things in life. Because I always tell you guys, your credit is connected to your character. This is why they say credit worthiness. They connect this to your character and your way of thinking. So many people you'll see talk about how to get different strategies of a even paid off mortgage reporting to their credit report, because even with all these mortgage loans being reported on your credit report, factors into your mix of credit. Okay, it factors into that 10% category, because banks understand if you had a mortgage, if you were a homeowner, they know the strenuous process they make you go through for approval. So it makes you look like a better risk. So understand, ownership versus renting is a factor when it comes to banks. Also, a big factor is your marital status. Yes, especially a lot of times in insurance, if you are married, you're going to pay a cheaper rate, because married people tend to be more responsible because they have a family. So marital status, you will be judged. Even when it comes to lending, people that are married will have more household income. So when you're processing an application, it'll ask you, what is your household income? You can include, even on a credit card application, your spouse's income in that. Because if you're married and both of you guys are working, and especially in this modern day and age, women a lot of times work. Now your spouse income becomes an asset and a way that banks judge you. And you have another category that you guys need to know. Insurance losses. Yeah. Insurance losses that you had. So if you had a car accident or a recent fire as a homeowner, that stuff in your loss that you claim goes on your LexisNexis report, and it is judged, and you get in your next insurance policy and even in lending. So take, for instance, if you just had a fire per se on your home, and you had that fire, you put a loss claim in for that, then let's say you go and apply for a credit card and you have good credit. You could be denied because they have that information working in the background, and they can see you recently have a loss. And it could be, to them, looked at, you might be in a financial strength, so that factor can be looked at for loans. The insurance company, even when I worked as an agent, they have something called the LIS. That's the insurance loss system. So if you're a person that always even make claims on your car insurance or even renter's insurance. Like, you're always processing claims, and people would get offended when I would tell them, say, you might need to pay out of pocket. That's being looked at because it looks like you're always in some kind of calamity, loss. It makes you look irresponsible if you always have an accident, and you're a risk financially. You're getting hurt in a car accident. You might not be employed. You might not pay your bills, or you might not be fired from your job, but you're not able to work. So these things are looked at as a factor, and it is kept on LexisNexis. Now, the 8th category is your driving record. Okay, all of that stuff is being also recorded on LexisNexis and can be looked at. So especially, you already know, for insurance premiums, that already makes a big factor of your driving record, how many tickets you're getting. Also, they keep that information there. And for you guys that want to drive Uber and you went to do DoorDash and you found out, they denied me, they're getting that information from your background check, which is coming from LexisNexis, and they have your tickets. Even if you don't even get charged with it, found guilty, the fact that you got that record is being reported on that report. Okay, so those kind of activities, and this is why even with y'all, your bankruptcies, is they're getting that information. All that court information goes on your LexisNexis report. So this is where the bureaus pick up that information. It's on your LexisNexis report. Now, you can always dispute that information from LexisNexis. Then number 9, watch this category, and they're trying to get access to this information, even though, to make it legal to judge you by this information, even though they do have access. Your health information. So when I work as an insurance agent and on the life insurance side, there's something that's called for us the MIB. I call it the Men in Black, because they're getting your private information and you really don't understand how they're doing that. They're getting access to that information because when you are applying for life insurance, you'll find they'll ask you, when was the last time you went to the doctor? Who is your doctor? Do you have any illnesses? And a lot of people, let's say if you have diabetes, they'll find out their insurance premiums are higher because they have a health issue. And so people will tend to try to omit that information now because I know it's going to cost me more. And so they'll say, oh, I don't have, anything. So once you sign the form, because you got to sign to submit to try to get life insurance or even health insurance, that you have these existing conditions, they go and pull this system up, the MIB system, and it will show, okay, this person is taking metformin. They said they didn't, and you're looking at the application, they don't have any medication they're on. So you taking metformin, now they know you have diabetes. So when you go to the doctor and you're getting this stuff and using your personal health insurance to pay for that, or going to pay for the doctor's visit, that is being recorded, and that's in that MIB. So if you're a person, you're not feeling well, and you like, hey, I need to get some life insurance. If you went to see that doctor and use that insurance, they'll understand and know. They're going to ask for certain things. So say if you went to see your doctor and they told you need to get a biopsy, and you're like, oh, let me go and get some life insurance. You fill out that application, they'll see that the doctor requested for you to have a biopsy because you used your health insurance. So you have to be careful and know that they're looking on these at these things. And they even want to access this legally to judge you for lending. Even though they own all these companies, they have that information. Why would they want to do that? Because if you're sick and you have a terminal disease, they don't want to give you a big credit card line. They want to limit because you may leave here, so they won't be able to recoup. So keep that in mind, you guys. If it's certain things, some things, if I know certain things was going on with me, I wouldn't use my health insurance. I'm using my cash out of pocket to pay for this doctor visit. If you can do that or whatever, because this is how they're getting that information. So you want to make sure you keep that in mind, because you can be judged by this. For life insurance, you are definitely judged. Health care, if you're trying to get health insurance and you're paying out of pocket, pre-existing conditions, this is where they're getting this, and they want to start using it for lending. So understand and keep that in mind. So those are the factors, and I'm going to give you the number 10. I was number 10. I had talked to an attorney, and he told me this. So where you went to high school, insurance companies can judge you on what community that you went to high school with. And I was talking to an attorney, an insurance attorney, and say if you're a person right now, you got hurt in a car accident, or you're trying to get a lawsuit, they look at where you went to high school to put an offer for a settlement. If you came from a lower income community, they're going to put a lower offer for a settlement. Yeah, and that is on your LexisNexis report, because the insurance company is trying to manage their risk, and they will, if they can pay you less, they will. So you can have the same injuries as a person that came from a middle class, let's say neighborhood, and your offers, depending on where you went to your high school, offers for settlement will be different. That person that came from that community that was middle class will get a larger settlement offer than you. And so all of that can look very discriminatory, because you cannot control where you graduated from. You were a teenager. But those factors are being judged. So these things are being kept on your LexisNexis report. You guys need to get your hands on that report. You can dispute certain items off of that report. If you're a person that got denied to be an Uber driver, you need to get that report and dispute those things off of your report. So you want to challenge it just like you would challenge anything else that's on your credit. So I hope this information was helpful. If you have any questions, you can leave it in the comment section. But if it's detailed questions, you can go to my website. All my questions go directly to my cell phone. And I hope to see you guys in the next video. Stay tuned.